Back to the Larry Kudlow Show.
John Rutledge, old and dear friend of mine, a brilliant economist. We've worked together since the late 70s, including on the Reagan tax cuts and budget cuts. And he's one of the smartest people I know. He's a chief investment strategist for Safanad, if I'm saying it right. He's a senior research fellow at Claremont Graduate University. John, I was delighted to hear that you were going to come on the show. And let's talk a bit about what might the Trump economy look like. I've been calling it a blue-collar boom. But what do you think? You know Trump, you've seen him, and you have a pretty good understanding of how these economies work dynamically. What are you looking for, John Rutledge?
Well, you know, if you just run down through the main numbers, the GDP numbers or the growth or the jobs or the incomes are really quite strong, and ought to remain that way. And if you can get some tax changes in, could be even stronger. The surprise people will have is that the inflation numbers have a big mistake in them. It's not devious; it's just a mistake of economists. Basically. About 2/3 of the people in America own their own houses, and the way they calculate the numbers, they imagine that you rent your house from yourself, believe it or not, and they charge you for that in the consumer price index. So in October, 2.6% inflation actually is 1.6 once you take out the fake owner's equivalent rent, and it's going to stay that way. So I think you're looking at a point where prices are high, but they're going to remain low inflation. You've got pretty strong growth coming in, and you've got huge gains in net worth, which is the thing economists never talk about.
That's right. That net worth is very important. John, do you think, you hear from quote-unquote Wall Street economists, and then you hear from the group of Nobel Prize winners that always supports Democrats. Everybody says Trump's plans are going to be inflationary. What do you make of that?
Well, I think we're starting from a point where the inflation numbers are actually pretty well under control, and ought to stay that way. If you can use tax policy to stimulate capital spending actually makes more growth and makes prices go down, not go up. In terms of tariffs, who knows what happens once you start engaging with my old friends in China, but. I think that you're looking at a pretty good inflation environment. The thing that economists typically get wrong is that in focusing on the GDP economy or the jobs economy and forgetting about the balance sheet, they forget about the huge gains in asset prices and what that has done to people's fundamental level of financial security, and what it's also doing to keep inflation under control. So I think that's really the trick. People today are starting to worry too much about the budget deficit and too much about the debt. The debt is actually quite tiny once you look at it in the right way.
Well, what's household net worth is what, about 170 trillion, some odd?
About the last number is from September, and it's higher than that today because we've had a good market since then. The September numbers were the total net worth of the country was 163 trillion, a little bit more than that for households. The total assets owned by people in this country is more than $500 trillion, Larry.
Oh,
500 trillion. That's more than 18 years times GDP. And it makes sense because it's everything anybody's ever produced since Ben Franklin minus what we already ate. So it's the whole pile of stuff you see out of an airplane window. Government debt's $27 trillion. That's only 5% of that balance sheet.
Tell me, the $500 trillion in assets, just kind of give me a couple of for instances.
Well, there's 300 and some odd trillion dollars worth of financial assets, stocks and bonds and mutual funds and stuff like that, the stuff people talk about. But there's another almost 200 trillion worth of what George Carlin used to call stuff. Stuff is your house and your car and your boat and the farmland and all of that. Everything you see out of an airplane window. That's excluded from all the economic models the Fed uses. And that balance sheet grows every year. If you look back over the last half a dozen decades, the balance sheet grows maybe 5, 6, 7% a year. Some of it real, some of it price. And that's what that means is, since net worth is growing that fast, every year people line up in front of the Treasury and apply for buying some more bonds. In fact, they'll want about 5% more than they had last year. If this year they have $27 trillion, that means there's automatic demand for new bonds created of about $1.5 trillion every year just from net worth growth. So when you talk about CBO numbers that talk about, economic plans add up to like $7 trillion or something over the next 10 years, that's peanuts compared to the net worth growth that's going to digest those bonds into it. So I don't think that is an interesting problem at all. Much more interesting problem is making sure that people understand how important this stuff is.
John, if you had your druthers, what kind of tax cuts would you recommend to Mr. Trump?
Well, people talk about, in the finance books, they talk about the cost of capital being a corporate tax rate. The fact is, any money that goes to people that starts in corporations goes through the tax code to get there. And the people who own those assets are generally in the upper income tax brackets. So the top personal tax rate is the single most important number to determine the after-tax return on the stock of capital, which is what people use to determine how many assets to buy. And so if you're talking about stimulating net worth growth, that to me is the most important number to start with. Corporate tax is fine, but corporations have got smart guys to help them avoid taxes. People don't. And so I really think that's where I would that's where I'd bear down.
So if you own your own small business, LLCs and so forth, they pay the top they pay the top individual tax rate, right?
Always.
So
that's the real capital stuff. Yeah.
We ought to get that back down towards 30%, John.
Yeah, actually, if not lower than that. And the other interesting thing is those people are also today the ones who are being denied bank credit because bank loans to businesses, which is almost always small businesses, are actually no bigger than they were a couple of years ago.
Right.
C&I loans aren't growing at all, and when people can't get money from the bank, they have to go to the street. They have to go to non-bank lenders, and it's very expensive.
All right.
Makes it hard. That's where the jobs come from, is those small private companies.
Nobody's smarter than John Rutledge. John, thank you for this. Appreciate it very much. Hope to see you soon. Folks, take a quick break, and then the new Treasury Secretary designate, Scott Bessent, will be on.
If you're a maintenance supervisor for a commercial property, you've had to deal with everything from leaky faucets to flickering light bulbs. But nothing's worse than that ancient boiler that's lived in the building since the day it was built, 50 years ago. It's enough to make anyone lose their cool. That's where Grainger comes in. With industrial-grade products and dependable fast delivery, Grainger can help with any challenge, from worn-out components to everyday necessities. Call, click Grainger.com, or just stop by. Grainger, for the ones who get it done.